It was a fantastic quarter. I think that this return on equity line for corporate investment banking, 22%. I mean, I never thought that some of these numbers could ever happen. It's a remarkable quarter. And I mean, I looked, maybe someone's going to find some flaw in maybe investment banking. Give me a break. I mean, this is what happens when the economy's on fire, and why people felt if we ever got to earnings season, we could stop focusing on Amazon and the U.S. Postal Service.
Investment banking was down 10. There is a dispute, 11-cent dispute about some mark-to-market accounting. We're going with a higher number.
Right.
But in general, between the tax changes and now the trading volatility, up 13. I saw a Goldilocks reference in some of the coverage.
Yes, it has. I mean, look, it was 12.5 times this year's earnings. I mean, how has that happened versus, say, Campbell's Soup, which Goldman Sachs puts a sell on as much higher price earnings multiple? I know, and I know David and I used to discuss we never thought these numbers could happen.
The ROE in particular in the corporate investment bank. Yeah, no, listen, we were talking about reaching double digits would be a good thing.
Yes.
Would be a real sign of progress, and here we are well above that.
I think we're going to see a strange change in how much we pay for banks versus, say, how much we pay for consumer products.
You do? You really think so?
Yes, well, because the reason why I mention this is the Goldman note is so jarring because it says they can't afford the dividend.
Wait, what? What are you talking about?
They can't. Campbell's Soup can't pay the dividend.
Oh, Campbell's Soup. Okay.
Yeah. Well, I'm just saying that's a quintessential consumer packaged good company, versus like what look. Citi bought back 7% of its stock. Now they promised and they did it. Return on equity not as good. The return on equity is unbelievable for this division. But when I look at these numbers, I'm just kind of blown away. And I think, why are we paying so little for the banks when we know that we're in an interest rate cycle and they have very little loan loss? And then don't forget, it's kind of, you can't really tell maybe from the efficiency ratio, but they don't have what we used to call at Goldman Sachs dead wood, which are the regulators.
Yes. Now, Wells is a special story.
Yeah, it's hard.
Because they do warn they might face some very hefty payments to the CFPB and the OCC. We know they've underperformed over the past few months. They might need to revise some preliminary results on this cross-selling investigation.
Yeah, I mean, look, everyone was jumping up and down about how great it was. And then you actually, but unfortunately, if you read the release, it was a real hindrance to jumping up and down. Net interest income, $12.2 billion, down $86 million. Non-interest income, $9.7 billion, down $235 million. Average deposits, $1.3 trillion, down $2 billion. These are not the numbers that you want if you're a bank. These are numbers which just say, you know what, the government's really come down on us and starting to hurt our business. Now, they'll come on TV and they'll tell a real good game because, boy, do they tell a good game. But this is not the kind of numbers. These are numbers which just say, you know what's beginning to get to us. Like, people are starting to realize maybe we're not Mr. Clean anymore. So I did not like Wells's numbers. I just didn't.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.